Good morning, traders, and welcome to Phoenix Blues Morning Update. My name is Nishal Patel, and today is Thursday, the 9th of February. I'm going to be giving you a brief synopsis of what's happened on the market over the close of yesterday and what we should be looking at today. First things first, let's just have a look at let's quickly have a look at the news announcements being released today. We've obviously had the governor from the central bank in New Zealand, Wheeler, speaking. That was just after midnight our time in London. 9 a.m. this morning, we've got a governor from the central bank in Australia speaking. And then we've got later on this afternoon, just after midday, we've got the fortnightly unemployment claims coming out on from stateside. That's followed by the Bank of England governor Carney speaking as well, and no doubt he's going to have a lot to talk about in regards to inflation and also the government's or the central bank's objectives with monetary policy, especially with Brexit looming. So let's go straight to our charts. I think that's the best thing for us to do. And I think what I want to start with, just have a quick look at WTI. Now, WTI is quite important. We did have inventories come out yesterday. We can see WTI right now, or even if you're trading Brent crude, you're going to see something very similar in terms of price action wise. What you will see is you would have seen a bounce back in terms of oil. Now, quite contrary to what most people have seen, we did see with inventories out yesterday, inventories were really high from the US. But what we've seen is we've seen oil come down, cap below that 52 level, and on this particular chart we're at 51.70 roughly, and right now floating at 53, just over 53 dollars a barrel on WTI right now. So riding straight off that wave off the short that we had towards earlier on at the start of the week. One thing I would say is we did have inventories come out yesterday. They were larger than expected, but nonetheless, what we did see is we did after the slide we saw it initially at the start of the week, we saw a bounce back. Now, one thing that most people haven't seen is inventories, not just in crude, but inventories from from the refined products from crude. So the EIAs, which is the Energy Information Administration in the US, have come out and said that gasoline stocks are actually down. Now, what's that initially done is that's boosted up the price of crude. Obviously, what gasoline is refined from, and we've seen crude surge over the last day and a half, and most certainly it's been picking up the pace this morning. One thing we shouldn't forget is, despite the fact we have had production cuts from both OPEC and Russia, which are effectively supporting and propping up the prices to ensure that nothing's dropping below that 52. We've only had a few drops, or I would say two drops below that 52 level this year, as we can see highlighted on my chart right now. Just one there at early January, and then another one this week. In fact, what we have had is we've had production growth in a number of other emerging oil-producing states, such as Libya, Nigeria. And most certainly we have had an increase in production stateside as well. So what we've effectively got is we've got the price of crude lifting up slightly from OPEC and Russia with the production cuts, but that's been subdued or narrowed down because of advancements in machinery or the refinement of oil and the maintenance of them, as well as the increase in production of certain states. So that's something to be aware of, and that's why we're effectively caught in this area of consolidation, still pretty much there. Having a quick look at the euro. The euro's right now fairly flat, as we can see by this really quite small bar, which is quite unusual for this time of the morning. But as we can see, it's stuck on that long-term trend line that I've got here, drawn from pretty much a year ago to now. So Not much change year on year, but we have had some fluctuation. Pretty much stuck on that, as we can see. And really, and even yesterday we did have a slight drop and some slight strength in the USD, and we will see that across the board in our charts. Flicking straight over to the yen again, the yen is stuck on that 100-day moving average on this daily time frame, coming down, literally propping itself up, floating at 112.26. Australian dollar, quite interesting right now. I'm still above that 7,600 zone, and that's highlighted on my chart right now. Quite a key level. Let's not forget it's only been above this level over the course of the last year a handful of times, and has spent most of the last year below it. So quite a key. That 7,600 is quite key. To have a look at. Cable, moving over straight to cable right now. Cable still lifting up despite the fact a fairly unanimous vote from the Houses of Parliament and the MPs on Brexit talks. We are looking at a potential divorce outline between Britain and the EU to be scheduled for the 31st of March. But that hasn't really knocked cable so much. We do have this huge tail on the bar from Tuesday, but since then we've seen some quite steady movement in a bullish direction. Now, let's not forget we have had the Bank of England speaking and comments coming up from the Bank of England talking about the growth here in the UK, as well as key data, including inflation. Inflation is rising. Growth is, I would say, it's steady. But the most important details to traders in regards to this particular currency, alongside Brexit, is monetary policy from the Bank of England. Now, right now we are at 0.25%. In terms of the Bank of England's interest rate. Potentially, we are looking at August for any other kind of change in that. With their current policy in play, then we could potentially look for a rate cut in August. But with the data that's coming out and inflation figures the way they are, from what has been reported from the Bank of England, if inflation continues at the rate it's at, and most certainly our growth the way it's at, then potentially that rate cut is most certainly off the cards. If anything, we could maybe even look at a rate hike, which might be quite interesting. Last vote was unanimous on keeping rates exactly as they are. Cable's picking up right now, still floating up above that 1.25 level, which again is key, floating at 125.50s or 125.60 almost right now. Coming up to that fib fam that I'd highlighted on my previous morning update. You got 50% fib fam on this move that I had looked at previously, and paying attention to them. Still stuck in between that trap between the 100 and the 50-day moving average on this daily time frame. So moving on forward, final chart, just have a quick look at it will be gold. Gold coming up to that trend line as I was talking about this time last week. In fact, has rebounded really well and picked up the pace. Nice little trade sitting at 1241, coming up to that long-term trend line again. And glued to it. In terms of the equity markets, we've had a mixed bag over the course of this week, and most certainly the sharp drop in bond yields prompted investors to really sell shares in particular sectors that would be deemed more sensitive to economic growth, let's say, for example, such as mining stocks, as well as banks and financial institutions. So we've seen a bit of a mixed bag right now, potentially looking at a rebound off that. Let's not forget we are still in earnings season. We've had some really good earnings out, or earning reports out, from particular key blue chip companies, I would say, from within the US as well as the UK. Right now, we're just having a look at the S&P 500 floating at 2291, so definitely well above that 2200, and in fact, potentially looking to break it after we've had a small pullback yesterday. I'm just gonna have a quick look at the FTSE, and I think we're going to round up there for today. I'm just going to pull out the FTSE. In fact, I can't see it on my chart there, so I'm just going to do it the easy way, by just dragging and dropping and having a look at the the FTSE right now. The FTSE currently is floating 71.94. Again, had a slight dip over the course of last week, kissing that 50-day moving average and then bouncing back up again. Obviously, would be great to see the FTSE riding at the high that we saw towards the start of January, when we were on this continued and what seemed to be a never-ending bull run over the course of December. Just a little below that right now. Could potentially look at some retracement levels. That please be cautious, as I said, is earnings seasons, and please be aware to those particular stocks that are prone to be sold off due to bond yields. Okay, guys, this is Nishal Patel signing out for another week. Until next time, happy trading. Goodbye.